everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. With COVID-19 hitting the world, we saw the stock markets tumble, bounce back, and continue to recover as I speak. We also saw it freeze the Toronto real estate market. So prices took a dip for a few weeks and now it's recovering, with semis reaching all-time highs and detached houses almost recovering back to pre-COVID levels. On our end, we've been seeing a lot more investor interest since June. We noticed people who are buying aren't actually as focused on these lower prices, but rather going into the market to take advantage of these all-time low interest rates to expand their real estate portfolio. We also saw people who are showing interest but still observing the market. Now, the main reason for this is because they're afraid they might be buying at the wrong time. And I don't blame them for not knowing where the market is going, because things are still pretty uncertain in terms of whether there's going to be a second wave or how quickly our economy will actually recover. In this video, I'm going to address this frequently asked question: is it the right time to enter the market? If you're wondering the same thing, then keep watching. Let's start by looking at a turnkey property in Toronto. Your returns come from three main sources. Number one, cash flow, which is what you're left with after you deduct operating expenses and mortgage payments from the rent you receive. Number two, equity gained, which is the principal that you build up when you make those monthly mortgage payments. The last one is market appreciation. So just so you know, between 2001 to 2019, we saw an average of 6.7% appreciation per year in Toronto. Based on these three sources, how do numbers actually look like for a Toronto property? For simplicity's sake, I'm going to use quick and dirty math and not go into compounding. What this basically means is that our numbers will be more conservative compared to what they actually are. So for a typical property priced at $1 million, we're looking at an initial capital of $235,000 with a 20% down payment and closing costs. In 10 years, the total cash flow accumulated is $96,000 based on around $800 of cash flows a month. Your equity gained is around $200,000. And I'm going to use a more conservative 5% appreciation each year versus the 6.7% that we saw in the past, which takes us to $500,000 in appreciation at the end of 10 years. This means the total returns will be $796,000 or a 34% ROI annually. 34% ROI is pretty amazing, and that's why we love real estate as an investment. Now, if you look at historical prices, you'll see that real estate doesn't fluctuate nearly as much as the stock market. During the financial crisis in 2007, property prices dropped around 10% below the trend line. In the hot 2017 market before the bubble burst, prices rose 10% above the trend line. And during COVID, we saw a 10% drop in prices again. So based on history, we can say that 10% is a reasonable deviation from the norm for both the lows and the highs. And in the cycle, it looks like we've already reached that point and we're now recovering. But let's assume that you did purchase at the lows with a 10% discount. How much better would your returns look like compared to a normal market over a period of 10 years? With an extra 10% bump, your appreciation would be $600,000, giving an annual ROI of 38% instead of 34%. So yes, your returns are better if you buy at the low, but at that point, it's actually pretty hard to tell. During our latest chance, you'd have to run out during the start of the lockdown in early April to buy a house. And honestly, it's pretty risky. There was a lot of economic uncertainty then, and it's also physically risky. And that extra 10% discount isn't as significant if you distribute it over a long period of time. Now, to complete our best and worst case scenarios, let's see how things would look like if you purchased at the peak of a cycle with a 10% premium. We'll have an appreciation of $400,000 over 10 years or an annual ROI of 30%. 30% is not bad at all. Just like how 10% discount isn't very significant, a 10% premium on real estate, though not ideal, still offers great returns. While buying at the lows is always a bonus, it's hard to identify when you're in it, and the one-time discount will get diluted over time. And I don't have a crystal ball, and as a more conservative investor, I think speculating market isn't worth the added risk. What I do know is that mortgage rates are right now at an all-time low, and buying real estate offers great double-digit returns even if you buy at a premium. So instead of trying to find the right time to enter the market, here are 3 better tips from us. Number 1, consider your opportunity cost if you wait for the right time to buy. So even if you buy at the peak, your returns are still 30% a year. So holding off might actually mean you're losing out on more. Number 2, instead of timing the market, you have to know that real estate markets aren't as efficient as, say, the stock market. So it's very possible for you to find individual great deals if you know where and how to look, which helps you get better returns than normal in any market. I made another video specifically about this, so you should definitely head there to check it out afterwards. And I'll also put a link in the description below as well. Number 3, benefits of a great agent. Yes, great agents can find you good deals, so you don't have to watch that video that I just talked about. They can also be amazing negotiators. This means figuring out the best buying approach based on the seller and selling agent's personalities so you can buy at the best price, which ultimately means you can get higher than typical returns. If you're looking for an investment property in Toronto, that's our specialty. We'll look at your requirements and preferences so that we can find you a great deal on the market and help you buy it for the best price. I'll put a link in the description below so you know where to contact us and we can connect and chat more that way. Finally, if you like this video, please give us a thumbs up and don't forget to subscribe if you want to see more weekly Toronto real estate investing videos just like this one. That's all for me for this week. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.